Hello and welcome to this week's episode of What's It Going to Take for Me to Buy a House? What do I need to do? And today we're going to be talking about income. Income. One income works, one income doesn't. What if I switched? I'm a business owner, I'm self-employed, all the different incomes that come up when trying to buy a house, because a lot of times you guys have questions about what works and what doesn't work, and we're going to make sure you're on the right path and understand if you can use your current income. Okay, so as you guys know, this is a live feed. So ask your questions, comments, concerns in the chat, your scenarios, anything that comes up, any thought that you may have about your scenario, just put it in the chat, even if it doesn't relate to income. My topic is income, but you might have a different question, and that's okay too. We do this every week, guys, every weekend, Saturdays, 10 a.m. Pacific time. So wherever you're at, I'm drinking my coffee, just starting my day. You might be in your PJs, and that's okay. That's why we do it this way. I should have been a rapper, man. That was pretty smooth. But anyway, talking about income. So let's start with the most basic. Let's go to where majority of the United States lands when it comes to receiving income, and that is basic W-2 income, the biggest scam the government ever played on us. And the reason why is because when you receive your paycheck, you receive the amount they let you keep and took the rest. Social Security, federal, state, FICA, all the different little lines that say a couple hundred here, a couple hundred here, a couple thousand here, a couple hundred here, a couple thousand there, and then you get the portion that you get to keep. That's basic W-2 income. The majority of America receives their income this way because during, I think, right after or before World War II, they implemented the income tax system, so they automatically took the taxes to be able to fund the war, blah, blah, blah. But anyway, that's how income taxes are paid majority of the time. And that's how majority of us are paid. And that's just the way it is. Nothing you can do about it. Nothing you can change. Just kind of getting my little gripe out about the way we're paid. But here's the good news. W-2 income is one of the easiest incomes to calculate for a loan officer. Okay? Easy, simple. I mean, literally, here's all it is. Whatever you made in 2023, no, what year are we in? Okay. Whatever you made in 2024, then whatever you made in 2025, add your year to date, take 24 months plus whatever month your current paycheck stub is, and average it out. And that's your basic income. Now, in other scenarios where you got a raise or maybe a promotion, or maybe you went from part-time to full-time, different way to calculate, but it's very simple for loan officers who know what they're doing to be able to accomplish this, okay? So W-2 income is very simple. Now, here's what you need, guys. Pay attention, because on all these incomes that we're talking about, you're going to need a 2-year history. So let's say you started working when you were 18 years old, and now you're 20. That's a 2-year work history. Easy math, right? Let's say you started when you were 18 and now you're 35. That's 2 years or more. That's perfect. We're looking for a minimum of 2-year work history. Okay, minimum. Now, when you receive W-2 income, you receive paycheck stubs. So what we request, and this depends on the lender, but at a minimum, what we request is the last 2 years W-2s and your last 2 paycheck stubs. Okay. Now, depending on a few different factors, and there's reasons for this, and I'm not going to get into it, we may request your last 2 years of taxes. So 2 years W-2s for sure, 2 paycheck stubs for sure, and maybe your last 2 years taxes. Okay. So if this is the process you're going through and your W-2 income, get that documentation ready, give us a call, and let us know if you have any questions to make sure everything is correct. Here's another thing. A lot of people don't know the difference between their taxes and W-2. Okay. So what happens much of the time is when I request the last 2 years W-2s, I'll always get, or a lot of times get, the last 2 years of taxes. And that's not what I'm requesting. I don't want your taxes. I want your W-2. What's the W-2, Chris? It's the document or the piece of paper or the thing you got in the mail from your employer showing what you made that year. Typically, they come in January every year after the last year closed. So it tells you how much you made for the year. Then you take that document and you plug that into TurboTax, or you take that document to your tax preparer or your CPA. That's the W-2. I'll give you a hint. The document says W-2, okay? That's the W-2. That's what we're looking for. But much of the time, we get the taxes, and that's not what I'm requesting. And here's the reason why. The W-2 shows different income a lot of the time that the taxes don't. And I know you think, but it's going to my taxes, so it's going to reference everything. No, it doesn't. It's not the same. And if it does exist, it's bundled up in a bunch of stuff, and we don't know if it's accurate. So we want to go off the W-2s, okay? Why do you do this? Because that's what the banks are requesting. That's what the banks want from us, okay? So we got to make sure, one, we're calculating correctly, and two, that we're providing the correct documentation to be able to get you the loan when the time comes, guys. That's the name of the game, getting you guys a house. Okay, next step. Let's talk about self-employed, okay? Self-employed. What is self-employed? Well, it's when you don't own a business necessarily, but you make your own money with your own efforts, and you don't get paid unless you produce, okay? That's self-employed. So I'll give you an example. You ever drive these busy parking lots, maybe at the mall, maybe like business centers, stuff like that, and you see a guy that's working really hard, washing a line of cars. He has his truck with his trailer and his gun with the compressor and the generator, and that's not a machine gun, guys. That's a water pressure. What is that called? Pressure washer. But the generator is making the sound. Okay, that guy's self-employed. He doesn't have anybody that's giving him a contract or paying him hourly to do that. That guy went out, bought a truck, bought a trailer, bought a compressor, bought a pressure washer, bought a big old tank thing to put water in, and then went out and asked people if they want their cars washed, okay? And they're going to pay him somewhere between $50 to $150 to wash that car. And he's probably going to do half a dozen today, maybe a dozen, maybe a couple dozen, making pretty good money, okay? And I bet a lot of it's cash, and I bet a lot of it's going to be through Venmo or Apple Pay or different versions like that. And he probably has one of those things called a Square, where the person takes their credit card and taps on it, and they're able to pay him. And what will happen is he will, at the end, hopefully at the end of the day, he'll reconcile with how much he made that day, okay? And then he'll do that at the end of the week or the end of the month or once a year, which is a pain in the butt. And then he takes all that data and plugs it into TurboTax, or he gives it to a CPA or his tax person. That guy's self-employed, okay? That guy's 100% self-employed. He's claiming everything that he makes, or supposed to at least claim everything that he makes. And then he has an opportunity to take his deductions. How much did the truck cost? What about the gas for the truck? What about the trailer? What about the tires you had to buy for the trailer because they blew out? What about the water he constantly has to use? What about the chemicals that he uses to wash the car? What about the hoses that he uses for the compressor and the pressure washer that, you know, go out sometimes, or the fittings? So this person has expenses to run his business. Now, let's say that he washes a car a day at $100. He makes $100 a day, okay? $700 a week. $30,000 to $3,100 a month. $2,800 in February, of course, for you math geniuses. Now, he has expenses. He had to buy tires. That was, let's say he made $3,000 that month, worked 30 days, okay? Let's say he worked in April, had a 30-day month, and he made $3,000, and he had to buy tires, which cost $500. And then he had to buy gasoline, which cost him $1,000. So let's say that's all he had to buy that month, okay? He brought in $3,000, but he had expenses of $1,500. Okay. So for that month, he didn't make $3,000. He made $1,500. That's self-employed. That's self-employed. Now, what does that mean when buying a house? Okay. What does that mean when buying a house? Now, let's just say that he had to do that every single month. Every single month, he made $3,000 a month times 12 is $36,000 a year. And every single month, he had to expense $1,500 in whatever it may be, gas, like all the things that I've already named. Okay. He didn't make $36,000 that year. He made $18,000 that year because half of his income went to his expenses. So he used that as a deduction because that's not his true income. That was the expense of doing business. So where is this a challenge? Well, let's say he does that 2 years in a row. So if he does that 2 years in a row, what is he likely to do the next year? About the same amount. What are his expenses going to be likely the next year? About the same. What does that mean? It means he didn't make $36,000 that year. It means he made he's going to make $18,000. So when we put a house home loan together, what income do we use? $18,000. Now, what if he didn't have any expenses? Or what if he just didn't write them off as deductions? Then in that case, he made $36,000 a year. But here's what that means to you self-employed people. It means that you'll pay taxes at $36,000, which is a larger amount, than $18,000, which is a smaller amount. And this is the crossroad that self-employed run into, because it's like, I want to buy a house, I make a lot of money, but you have all these deductions. Okay. Now, I'm only explaining this and going deep because I want you guys to have a good understanding of what happens, because many of you are self-employed and you know what you're doing. You're going to your tax person and you're saying, hey, I made a lot of money this year, 100,000, 200,000, 300,000, but I don't want to pay a lot in taxes. So your CPAs, which are smart and, I call them geniuses sometimes, are able to find these deductions that are legal that you actually did, but they have to swift through all this stuff to figure it out to get your income down low enough to where you're going to have a small or maybe not even non-existent IRS bill, which seems pretty cool. But then you come to me and you go, hey, I want to buy a $1 million house, $600,000 house, whatever that number is. And I go, you only made $40,000 or you only made $20,000. And that's not enough money to use to borrow that much on a house. Because here's what it is, guys. So just as an example, okay, we'll use this exact person's scenario that I just gave. He makes $3,000 a month and he expenses $1,500 a month, and he wants to buy a $300,000 house. Okay, wants to buy a $300,000 house, and believes he can afford a $300,000 house. Why? Because his friends live in that area; they make about the same amount of money. His family lives in that area, and they make about the same amount of money. So he should be able to live in that area because he makes the same amount of money, right? Now, a $300,000 house has about a $2,200 a month mortgage payment, $2,000 to $2,200 depending. But how much does he make? $1,500. So how on earth would he ever be able to pay a $2,200 a month mortgage payment, or $2,000 or $1,800 for that fact, for this argument, if he only brings in $1,500 a month? One, he doesn't make enough money to pay that mortgage. Second, how is he going to be able to pay for food, water, shelter? Well, I guess this is the shelter we're talking about. Water, food, gasoline, the things that we need to survive, toothpaste, soap. Okay. So medical, all the things that we need. So that's why it doesn't work. Now, if he's just saying he had $1,500 in expenses, but he actually had a lot smaller, maybe 100, maybe none, then he would be able to pay that mortgage, right? Because he would make $3,000 a month. He would pay $2,200 a month for the mortgage and still have $800 left over for life, which is how a lot of us live today. Now, I'm not saying that scenario will get approved. I'm just trying to share with you how that scenario doesn't make any sense, because people come to me saying, I make good money, bro, but they don't show it on their taxes. So whatever you tell the IRS is what the mortgage company is going to use. Okay. So that's the biggest point that I'm trying to hit here. Now, what I'm going to do is I'm going to put my phone number in the chat. So it's right there, 909-841-3058. So if you guys have any questions later on and you want to talk about this privately, go ahead and give me a call. For the rest of you, go ahead and load up that chat with any questions, comments, concerns that you have about the home buying process. Today, we're talking about income. We already covered W-2 income, and now we're covering self-employed income. So let's wrap this self-employed section up, okay? The other version of self-employed is you're an independent producer. Let's say you're something called 1099, okay? 1099. This means that there's an organization that you go through that pays you for production, okay? They don't give you a base. They don't give you a salary. They don't give you an hourly. Your job is to produce. So who gets paid 1099? Real estate agents, loan officers, okay, insurance agents, sometimes hairstylists. So when you get paid 1099, truck drivers, when you get paid 1099, it's the same thing as running your own business in that scenario that I gave with the person that washes cars. Okay, let's talk about a truck driver that's 1099. Same situation. He owns his truck. He owns his trailer. He might, get his route through some kind of broker, or maybe he gets his route on his own. But there's expenses driving a truck: gasoline, tires, maintenance, insurance, licensing. There's all these things you have to pay throughout the year to be able to run your truck. And truck drivers, a lot of them make good money. Some of these guys have balance depending on their route and their, what they're able to accomplish. And they could make $500,000 a year, $500,000 a year, maybe more. And that's some good cash. That's some good coin there. But the expenses that come with it are huge, huge. How much is gasoline, guys? I mean, think about it. Gasoline, even if you're in an area where it's dirt cheap. I'm in California, where we get robbed on gasoline every single time we go to the pump. Every single time we get robbed, okay? But even if you're in an area where gasoline is actually more affordable, let's say Texas, okay? Texas. Let's call it $2 a gallon, okay? $2 a gallon. I think the gas tanks on a semi are 100 gallons, okay? And there's two of them, one on each side. It's those big cylinder silver things that you see on the side below the footstep, okay? I think they're 100 gallon a piece. So that's 200 gallons. That's $400 a fill up. And they're driving with loads from California to Pennsylvania, okay? So cross country. How many times do they fill up? In a month. How many times do they fill up? Twice a week? Maybe? Okay. So let's say 400 times 2, that's weekly, that's $800 times 52, that's $41,600 a year in fuel. Okay. And I'm probably conservative. That's probably not even an accurate number. Okay. Make $500,000 a year, take that off. Now you make about $450,000 a year. Okay. So now you're eating away at that income again. And what will happen at the end of the year is you will get a 1099 for that full amount that you made. Here's $500,000 1099 truck driver. Great job this year. Okay. Then he's going to take that to his CPA or TurboTax, and he's going to go, here's all my receipts for gas or my log, or they have cool stuff now. I'm being old school. They have like apps and stuff that they use to log themselves to be able to keep track of this stuff much better than back in the day. But the old school way is receipts. So keep your gas receipts, keep your meal receipts, keep your receipts for all the expenses that you have and did throughout the year, and give it to your CPA or plug it into TurboTax, and that's what's going to be your outcome. Now, in this scenario, it is likely they'll be able to buy a house, a very nice house, because that's a high earner. But for someone that makes $100,000, they could get themselves in a spot where they're not going to be able to buy a house. So self-employed, guys, is a slippery slope. One, because we get it. You don't want to pay the most amount of taxes. None of us do. But you're making a choice. So you're either going to pay the taxes and get a house, or not pay the taxes, and make it a big challenge for you to become a homeowner. So that's a slippery slope when it comes to being self-employed, guys. And I go off on a tangent. So just want to let you guys know that this stuff is important because this is what a lot of the borrowers are going through. I'm self-employed. I get to kind of pick and choose how much I pay in taxes. You, Mr. W-2, don't have a choice because they take your taxes. But Mr. W-2 probably has a easier process of buying a house than a self-employed. So there's pros and cons to everything, guys. There's no right or wrong. They've got the system covered. If you're going to buy a house, you have to claim the income. If you're not going to claim the income, it may be a challenge for you to buy a house unless you're an extremely high earner. Okay. Now, let's talk about someone who was W-2 that got ambitious. Okay. Maybe they worked at Amazon, Walmart, Target, distribution center, and they saw these truck drivers coming in and out. These truck drivers, brand new pair of Jordans every time they hop out or whatever. Maybe they had nice watches. Maybe they wearing nice things. And, the guy at the dock is like, how much you guys make, truck driver? And he's like, we do pretty good. Made $500,000 this year. And the guy at Target, who's a good earner too, 6-figure earner, okay, is like, really? $500,000? I'll make 6 figures, but I'll make $500,000. So they get ambitious and they're like, you know what? I'm gonna make the leap. I'm gonna take this money I've made and saved. I'm gonna get invested in my own truck. I'm gonna invest it in a trailer. I'm gonna get these routes. My buddy Ralph, who's a driver, is gonna help me do this. He's gonna help me transition into this new career. I'm gonna get CDL license, which is a commercial driver's license. I'm gonna take it to the next level, and I'm gonna make the money that Ralph makes. Okay. Now that's called going from W-2 to self-employed. Okay. And let's say that we're talking about a manager here. Okay. I'm going to assume a manager makes $125,000, $150,000 at Target, okay, warehouse, but he's trying to make $500,000 and he's going to be self-employed. And self-employed sounds cool. You know why? Because if I don't want to work today, I don't have to. If I want to go on vacation, I just go on vacation. So it sounds really cool, right? You get to run your own schedule. Now, let's say that he's been working at Target for 15 years, okay? 10 years, 15 years, 5 years, doesn't matter, okay? 2 years or more, they've been working at Target. But now they decide to go self-employed. They make the leap. Woo! Going to be independent. Going to make my own money. Going to run my own schedule. Going to do my own thing, okay? And let's say that first year you killed it. You killed it. Let's say you hit $300,000-$400,000 and you're like, man, I'm glad I did this. My lifestyle's better. I have better opportunity. I can make more money. Now I can provide better for my family, all those things, okay? If you wonder why I'm looking over here, I'm looking at my dog. She's outside. So doing good, right? You're feeling good about yourself, and then you call me, and you're like, yo, Chris, I saw your YouTubes, saw your TikToks, and I want to buy a house. I'm like, cool, man. What do you do for a living? I'm a truck driver. I'm like, cool. Are you over the road? Are you self-employed? Are you employed? Self-employed? Doing my thing? Like, cool, right on. Do me a favor. Send me your last 2 years' taxes of being self-employed. And you go, whoa. I actually started in April, and I've only been doing it for 8-9 months. So I don't have 2 years of taxes. And I go, that's going to be where you start over again, buddy. You have to give a 2-year history of being self-employed. If you go from W-2 as an employee to 1099 or just self-employed, you need to start all over again as self-employed. Now, there are some instances where we can get it approved with 1 year of taxes, but we're not gonna depend on that, okay? If this is you, if you have 1 year's W-2, give me a call. Let's talk. My number's in the chat. But for the rest of you, it's going to be a 2-year work history of being self-employed, which means I need 2 years of taxes showing you were self-employed. Also, you're going to want 2 full years of taxes because people become self-employed in the middle of the year, sometimes at the end of the year. Sometimes they become self-employed in, October, and they filed in October self-employed. Yeah. For 3 months. And then they have a full year. Okay. So we have to average those. let's say for 3 months, you made, I don't know, $30,000. And then for a year, you made $120,000. So we take $150,000 and divide that by 12. Okay. Your income's way low, way low. So you want 2 full years of filed taxes, 2 full years, both of them making $120,000 a year. Average them, easy math, you make $10,000 a month. You get that? Okay. So that's self-employed, guys. And at the end of the year, in the truck driver scenario, they're going to give you a 1099. So here's everything that you made. We collected everything. We brokered everything for you. We paid you out. Everything's, we didn't take any taxes out. It's the full amount of money, but now you're required to show the IRS what you made and pay the amount of taxes that's appropriate based on your expenses, blah, 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 blah. Okay. Now, so that was W-2. That was self-employed, both those that are cash and 1099. And then we talked about going from employed to self-employed, which means you need a 2-year work history all over again. Okay. Now let's talk about, you tried your hand at self-employed, but you realized that you had more time with your family when you were working at Target. Yeah, you're making big money now, $300,000, $400,000, $500,000 a year, but you're driving cross country and you have 2 little ones at home and a wife or a husband or whatever. And now you're away from them most of the time. You get to talk to them, you get to FaceTime them, but you're never there. And, Daddy, when are you coming home? The wife's like, the washer's still broken, so we need you to fix it. Clothes are piling up. And you're just not there to be a part of that life. Now, I'm not saying there's a right or wrong way to approach this, guys. I'm just saying that this happens sometimes. There's a transition when a person is employed, tries their hand at being self-employed, and then comes back to being employed. Okay. Now let's start this over. Let's say that this guy's been working at the Target warehouse for 10 years, making 6 figures. Then he goes to be self-employed, been doing that for 3-4 years. But, decided to make the move and go, you know what? This is good money, but it's not the life that for me at the moment. Okay. Decides to go back to Target W-2 employee. Okay. That guy, because he went from self-employed and he has a history of earning his own money, becomes employed by Target, can now buy a house as soon as he gets his first paycheck at Target. Literally, as soon as he gets no 2-year waiting period. Okay. There's only a 2-year waiting period if you go from employed to self-employed, sometimes 1 year. Remember that. But if you go from self-employed to employed, you don't have to start that waiting period over again. Okay. As long as you have a 2-year behind you, once you become an employee again at Target in this scenario, you don't have that 2-year waiting period. You do not. You can buy a house immediately. And let's hope that you get that manager's position back where you were making 6 figures because you were doing good for your family then. And that was a nice, comfortable living. Not as much as being self-employed, but definitely a good living. And hopefully you can get back in that spot and become a home owner. Now, that's our income chat, guys. There's a lot more that goes into this. There's other stuff. Actually, let me touch really quickly on those that own a business and are incorporated. Okay. Let's say you own a landscaping business and you're incorporated and it's called Chris and Lee Inc. Okay. Chris and Lee do landscaping. We do, grass and stuff like that. So, and you're incorporated and you have employees and you have contracts with big places. Let's say that like these places that build shopping centers where they need all the landscaping, they don't have a Walmart guy go out there or a Target guy. They have a landscaper go out there, professional company. And in that case, once again, guys, 2-year history of your personal taxes and 2-year history of your corporate taxes, because your corporate taxes, although it pays everybody, maybe even you, there's still money sometimes left over in the corporation to use towards the purchase of your house that you don't even know. I'll give you an example. I just did one recently where the couple paid themselves about $90,000 a year each, so $180,000 combined. After we calculated their corporate income, it added another $8,000 to the file. So Now it's not $16,000 a year. It's a month. It's $24,000 a month. So corporate taxes do count, guys. So if you are a business owner that pays themselves and has corporate taxes, 2 years tax, personal taxes, 2 years corporate taxes, put that together, get you a home. That's it for today, guys. Please reach out. My phone number is in the chat for any of you that are interested in buying a house in 2026 or 2027 or somewhere in the near future. We're here to help. I'm Chris Dominguez. Have yourselves a great weekend. Take care. Bye-bye.